quick.
Uh,
All right, so cool. First thing first, and let me ask if you've traded algo or SMC in any way.
yeah, I was trading SMC, but it wasn't like I wasn't getting certain things. Even though there are trades that I was taking that it was okay, but I don't know. With time, it
Okay.
felt like it wasn't going well. So that's how come I.
All right, so it's fine. I'm just going to go through probably today we're just going to be establishing a few things, yeah. So
Okay.
and then I think that will set you on the path, yeah.
All right. Sure.
So cool. First thing first, as a trader,
Yeah.
you must understand your kind of trading, like what style of trading do you trade? Are you a swing trader? Are you a day trader? Are you a position trader? All kinds of stuff. So that for you helps to know the kind of trade you're going to be taking and
Yeah.
how long you're going to be holding your trades and stuff like that.
Great.
Yeah. So, and
Uh,
also the kind of risk management that you're going to be applying for your trades. Yeah.
yeah.
Then, secondly, if you have that in view, then it helps you to know how to approach the market. Yeah. So, because every strategy works, trust me, every strategy works. Yeah.
Okay.
So there is
Yeah.
no to trading. If
Okay.
you have an edge and then you execute constantly, you find out at the end of the day that, especially when you have an edge, there is no way you have an edge that you are not profitable on the long run. Yeah, there is
Okay.
no, even if you are trading just support and resistance, yeah, and you know it
Yeah.
very well, and you continue to execute. Trust me, there is no time. If you understand support and resistance very well, you are going to
Okay.
be profitable on the long run. That's how this thing
Uh,
works. Yeah.
yeah.
So, and I know that you've heard many times that trading is 70% psychology, yeah, and all of those stuff.
Yeah. Yeah.
Now, the thing is, in as much as that is true, it is not absolute, yeah. Trading is
Okay.
first of all having an edge, because if you have a very balanced psychology and you don't have an edge, trust me, you're going to be losing money. You're just going to be bored losing money. You understand that?
Okay.
Yeah.
Yes, please.
So, but if you have an edge and you have a very balanced psychology or psychological
Okay.
strength,
Okay,
that's
please. Like the edge you are talking about, is it like a trading plan or something?
yes, it's
Okay.
a trading strategy, something that works for you. You know,
Okay.
what
Yeah.
puts you on a vintage point? What makes you, you consistently look out for these things and then they work. You've seen them work over and over again. That's
All
what
right.
an edge is. Yeah.
So
So
yes,
cool.
please.
I'm going to be I'm going to be listing out for me what I basically trade. So I'm going to be listing that out for us here so that you know.
Okay.
First of all, I trade what I call range. Yeah.
All right.
So I
Yeah.
trade what I call range. Sorry, let me use this. All right. So I trade what I call range. Yeah. Then that's
Yeah.
the first thing first. Then I trade what I call um for the range, this helps you to identify what point you are at the market, what are the strong lows and high. Yeah. So that's the range. Your strong lows and your strong highs. Yeah. So that's what I
Yeah.
consider as range. So I don't know. Okay, probably talk about that. Then secondly, I consider liquidity. Liquidity. Uh, so now, first thing first is range. And now for
Okay.
the range helps you to also identify liquidity points. Yeah, so if you have, for instance, you have a valid range of price, then you know what liquidity is valid and which is not valid. So you know what you are actually looking out for on the long run. So your range, very, very important. If you don't understand range, then you're going to have very big issues. And now for your range tells you the kind of market structure that there is within the range. So I'm just going to be talking about these two things here. So we're going to be talking about range and liquidity. So I assume that you're not a newbie, just like you said. So you understand basic market structure. So what are the basic market structure? We understand, for instance, let's assume we are in an uptrend. So we have a higher high, higher low, higher high, higher low, so higher high. So this is like your basic market structure. Am I correct?
Yeah.
Yes. Sure. So we have higher highs and higher lows, higher highs and higher lows. So this is what they taught us in its textbook. So you have higher highs and higher lows. But one of the things that they didn't tell you that you must have to look out for is your range in price. Because if you don't understand range in price, you have price doing stuff like this. You understand that?
Yeah.
Sorry. Let me get that again. So you find price doing something like this, and you're wondering, where are we? What is the higher high here, and what is the higher low? I don't know if you've had scenarios like this. You understand that? So you find something very complex as this, and you're wondering, okay, where is the higher high exactly? Where is the higher lows? So you are not exactly sure where you are at in the market. So that is where the range comes in. Because for instance, if you have a range, let's assume a range, and so this is a higher high and a higher low. So this consider higher high, which so we have our higher low here, HL. So now, if you have this, yeah. So let's assume you have this as your higher high and higher low. So now, you know that this for you is a break of structure, correct? Sorry. Okay. This for you is a break of structure, correct?
Sure.
So let's mark that BOS. So you have your break of structure here. Now, what you want to also now that's how to identify a range. I'm just teaching you how to identify a range. Now, within this range, you can have something like this. You can have something like this. I want it to be more complex so that you understand what I mean.
Okay.
So let me just change the color of this. So say black. Do you understand that now?
Yes.
Sorry. So let's go back to that. Okay. Now, if you look at this very well, you find out your range overall. You have a range of this high and this low, correct? And then we had the breakout structure at this place. So what are you expecting from price? You're expecting a new higher low, correct? Is it lower highs? Sorry, is it? Sorry, higher low, then higher high, yeah. So you are expecting, now that's like the market expectation, yeah. So you're expecting a higher low and a higher high. Let me go back to my color. So now, but then if you don't understand that all of this structure within this higher high and higher low are internal structures, then you will now be confused. You don't even know where you're at in price. Yeah. So you're having a break of structure to the downside here. You're having another break of structure to the upside. You're having a break of structure to the downside, and then you're having multiple breaks of structure. But so long as you are still within the range in price, this is what you have. This is a higher high. Price is only going to create a higher low, then to break out to create another higher high. Yeah? Many of these guys are caught up in this. So they have a break of structure here. They think, okay, now price is bullish, yeah? So they want to buy from here. You see that? They are trying to buy from here. They are being taken out. They said, okay, now price is bearish. You understand? They want to sell from here. And price takes them out. They said, now we are bullish.
I think what you are explaining, I think what you are explaining is very true, because most of the times I get liquidated out of the markets because of this thing. Like
Yeah.
especially when you pack out your zone and go to the lower time frame trying to catch a
Yeah,
trade,
yeah, yeah,
then
yeah. Exactly.
you get liquidated. Yeah.
Yeah, you get multiple times. Okay, you have a
Yeah.
breakout structure. You want to now buy from here, then price takes you out. You wonder, okay, you are
Yeah.
now bearish. You want to sell from here, price takes you out.
Takes you out. Yeah.
So you're wondering, where are we in price? Like, what is going on? I don't understand what is going on exactly. So you don't know where you're at in price. So you're confused. Now, this is what this helps you to understand. Your range helps you to understand this particular stuff. And now I will teach you.
Okay.
Let me screenshot this. I'll send to you later. Yeah.
Yeah.
So cool. You have your range, then you have your structures within your range. So for the fact that price hasn't taken out this high, you are still bullish. You understand that?
Yes, please.
Yeah. For the fact that price hasn't taken out this high, you are still bullish. So all you need to do is to look out for something from these areas to your left hand side, yeah, to give you the next break of structure.
Okay.
Same thing, you're looking for something on this left hand side to give you your next break of structure.
Oh.
Do you understand that now? So you are not caught within this range in price. So you understand where you are at in price. So, and I'm going to show you this, on the chart so that you understand that. But before then, let me also teach you how to identify a proper range, because of course this is textbook. You wouldn't just go to the market and find this. You understand that? You wouldn't just go to the market and find this. It rarely happens like that. So, can I delete this?
Sure. I have a screenshot of it.
Okay. Sorry. So cool. Now, how do I identify my range? First of all, in identifying your range, okay, let me do this. So, in identifying your range, so let me say range, there are two things to note. First of all, you want to note your last higher time frame order flow. Yeah. So last higher time frame order flow. Yeah.
Yeah.
And now, what is
please, what's the order flow? What's the order flow?
Yeah, you're going to understand that. That's what I'm getting to. I'm going to explain everything I'm writing down for you. Yeah.
All right, sir.
Yeah, so, and now the rule for the last higher time frame order flow is that it must come from previous day. Do you understand that?
Yeah.
So at every end of year, it must come from previous day. So what's the rule? Let me highlight that real quick. So the rule for this, right? What's this? Shift. Sorry. Okay, sorry. What am I doing? Oh, I'm trying to use the bracket button, but I don't know why it's not working here. The rule here is, let me see if it's gonna work this time. All right. So the rule is that it must come from the previous day. It must come from previous day. Yeah.
Yes, please.
Previous day. Now, I'm going to explain this. That's how to identify your range. That it must be last higher time frame order flow, and it must come from previous day. So that's where you bring in timing, sessions, and all of those stuff. Okay. You understand that now? So cool.
Yes,
what do I? And now our golden time frame for this is H1. Yeah.
Okay.
H1 is our golden time frame. So if you're looking for your range and your last higher time frame order flow, the time frame you must use is H1.
Yeah.
You know, go to 15
minutes. That's the highest you can go.
That's the high. That's for intraday, for a day trader like us, people who trade
daily.
Yeah, high one H1 is time frame for us. Probably if you are a swing trader, maybe if you want to start swinging, you can use the 4H, 4 hours.
Okay.
Yeah, so for day traders like us, we use the H1. Now, what do I want to see? What do I want to see on the H1? I want to see this. So, for instance, let's assume we are bullish here. Price is breaking highs on the H1, and then just like we have today. Now, for me to confirm a range, because I'm not just going to confirm a range because price took out this structural high. Yeah. So because price took out this high, doesn't mean then I'm now going, after the break, I'll now sell. Yeah. I'll now sell because price took out this high. Because we can have price take out this high and price does something like this. You just see price doing something like this. Yeah. So you understand that?
Yeah.
So price never gets to come back. So they tell you do 50%, what's it called? That you should use your Fibonacci 50% retracement and all those stuff. How about when price decides to now continue to buy and never comes back to the 50%? What happens to you? Yeah. So that is why identifying your range is very important. So how do I identify my range? It's very important. The moment I have a break of structure, what I want to see to be able to identify a range is on the H1. I want to see a bearish candle, showing intention. Then a bullish candle close, showing continuation. Yeah. So price an attempt to continue to buy. Then the failure of that bullish candle. You understand that?
Okay. Still on the
H1. Yeah. Still on the H1.
Okay. Still on the H1. Okay.
Yeah. So you have a break of structure. Then you want to confirm your range. You want to see a bearish candle close, a bullish candle attempt, and a bullish candle failure.
All right.
You can also have it in these lights. You have like your break of structure. Yeah. So you have a bearish candle, price takes it out with a bullish candle, and then bullish candle fail at this point. It's just like your regular chalk here. Your regular chalk and change of character or stuff like that. Now the problem with many of us is that we look for these things on the lower time frames. Yeah, and we get burnt. Yeah.
Yeah.
So you want to see H1 do something like this. Sorry, let me go back. Yeah, you want to see H1 do something like this. And then what this does for you is that it makes this a strong low and this a strong high.
Okay.
You understand that now? So the moment you have this, you have your range. You get it now? You have your range from here to here. So this is your range in price. This high and this low becomes your range. Then you can safely use your Fibonacci if you like. You understand that? To do the 50% and stuff like that. But then I don't use Fibonacci. I've never used it for anything. So, but what I do is basically the moment I find my range on the higher time frame, I know that this high is subject to liquidity because, of course, we are bullish. Price is meant to take out highs, correct?
Yeah.
So that's the job of every low, is to take out high. So if you're in a bullish market, the highs are highly subject to liquidity. You understand that? But because we have this, what I want to do is that I know, most times when you trade from this extreme, you don't get that reaction you're looking for. Most times, except for cases where price is exhausted. Yeah? Sorry, my drawing is bad. I don't know why. Okay, now, especially for cases where price, probably maybe this has taken out a higher time frame liquidity to the left-hand side. So price may now do something like this. You get it now? Or if price hasn't taken out any liquidity from here, there's a high chance that this guy is not going to hold. Reasons being that we are in a bullish market, bearish signals are kind of weak. Yeah? Or will be most likely be used as liquidity. So sometimes what I do is I wait for price to take it out. Yeah? Then take something on the left-hand side here. and then I engage. Now, the reason why I will engage, and my engagement from here is to target, because they bought from here to take out this guy, you will now think this is now the range. You understand that? So you are looking for a buy from here. You see how this guy is playing your mind? So you're looking for buys from here. This is the original range, this low and this high. These are the original range. So now they take liquidity from here, mitigate something on the higher time frame, then they are selling. You are looking to buy from here, they are liquidated. So they come into the real range in this area and continue.
Before they buy. Okay.
You see that now? Very, very tactical. I mean, very tactical. So one of the things you want to do for yourself as a trader is to avoid internal range. Yeah? Avoid internal range. The moment you are able to spot out your liquidity, sorry, let me take this. The moment you're able to spot out your range, which is the high and the lows, your liquidity point, avoid the middle of these markets. Avoid it. You understand that? Because many times you'll be bumped. many times you'll be bumped. So you have your range in price, you have your swing low, your swing high. What you're waiting for price to do is to come into a swing low, you look for an entry here, and then you buy. So whether price comes to take out internal liquidity and continue buying, or price gives you a manipulation first, so you have, say, a manipulation force. This happened during London a lot. Yeah. So you have a manipulation force, people trying to sell from their price, they take them out, and then they give you the real sell. Whichever way, this is your swing low. So this is your potential area to get in on that big buy move you're looking for.
Yeah.
Now?
Yes, please.
When price is bullish, it is only safe for you to be getting in on bullish moves. Yeah? It's only safe for you to be getting on bullish moves. When price is bearish, it's only safe for you to get in on bearish moves. Yeah?
Yeah.
Now, that's the reason why if price is bullish, to catch a sell reversal is very difficult, except you know how to play the game. Yeah? Just like I showed you here. So, you may want to sell here, you're taking out, you're wondering, okay, we are now bullish, you want to buy here. You are being swept. You're wondering what's happening. You see that now? So, but if you understand your range, you know that this is my low, this is my high. Because we are bullish, this is the only place that is most convenient to look for a buy continuation. All of these things are liquidity build-ups for this particular guy to give you that buy. So, but if you know how to catch the sell, like I just showed you here, you wait for your sell order flow to be violated, mitigate something on the left, and then you catch this move to this guy to continue to buy. So you can literally get in on the sell and get in on the buy. So now, this after, let me just draw this. Let me give you a picture of this, then I'll go to the chart. You know?
Yeah.
Go to the chart and do the chart work. But hope you're getting this. So
yes, please. I'm getting it.
So now, so we have our break of structure, and then we have bearish candle, bullish candle failure. So this is now our range, yeah? So
yes, please.
Our range. So what you have is you have a swing low. Let me use this, a swing low here. Swing low. This is not. So we have a swing low, which we have a swing high. swing high. Now, do you know, we call this, what is it called? Sorry, we call this buy OF. Yeah?
Please come again.
Yeah. Are you with me?
Yeah, is that we call that
Buy OF. BOF. Buy higher time frame order flow for buy. Yeah?
Okay.
Buy order flow, that's what it means. Buy OF.
Okay.
Yeah, buy order flow. What's happening here?
Okay.
So we call that buy order flow. We call this sell order flow. Sorry. We call this sell OF. So sell OF. You get it? So what it means is sell order flow. You understand that?
Yes, please.
So this is where the last step for the buy is. So when price come into this level, we are looking for buy potentials. Yeah.
Okay.
So this is the sell order flow. And now this must come from previous day. Like this must come from either Asia or NY of the previous day. If it happens in London, let's assume we didn't have a sell order flow in Asia, then it now happens in London. It's not valid. You understand that now? It's not valid.
Yeah.
Yeah. So you must understand this. So we have our sell OF. This sell OF means sell order flow. SOF, sell order flow. Buy order flow. Basically means the buy area and the sell area.
Okay.
So because your break of structure is towards the upside, so most likely buy is the high probability setup.
Okay.
So now if I inverse this, you have that for yourself.
Okay.
You understand that? So your break of structure is the sell side. So you have sell boss, then you have sell OF, buy OF, and stuff like that. So this is your buy.
So with the sell,
you say?
With the sell, the BOF becomes SOF, right?
Yeah, exactly. So I wanted to do this.
Okay.
You understand that now?
Yes, please.
So that's how this is for when you're on a downtrend.
Yeah.
And then when I inverse it, remove the inverse when you're on an uptrend. So this changes. This comes.
Sure. Okay. Thank you.
Get it now. So this is how to identify your range. The moment you get this, trust me, you're going to have a very smooth trading day for that. Now, trust this doesn't always happen. Yeah, it doesn't always happen. That's where patience comes in. Yeah, you want to be patient and watch price develop. Yeah, you mustn't catch every move in the market. But when you have this set for London, you are going to have a very beautiful trading day.
All right.
Yeah. So much have been said. Let me go to the chat. I think this call is going to expire in 8 minutes. I'm going to send another link to explain.
Okay.
So can we?
I hope you are recording this one.
Yeah, it's being recorded. I'm going to forward the recordings to you.
All right, sir.
So now,
thank you.
You can ask me any question concerning what we've just talked about, so that I'll do the real chat work when I send you the next link.
Okay. So I wanted to ask that the order flow is basically maybe higher highs and higher lows.
Yeah. Now, let me go down to H1 so that you know how complex this is. Somehow, now, if you look at this price action, critical. This is on the H1. So you find out we have multiple price H1 structures here.
Yeah.
So sometimes and trust me, this happened within, let me see. This was on Tuesday, and at this point, this is on Thursday. So Tuesday to Thursday till Monday, we are still within this level in price. Imagine. So we are still within these areas. From Tuesday We are still here. You understand that now?
Yeah.
So
Yeah.
what you want to ask yourself, where is your range? Because sometimes when it happens like this within days, you are now confused. You don't even know where your range is. We are trading this, you are trading these internals, you are looking for a range within this guy. Then you take your eyes off what you are supposed to be looking out for. You get it now? Now let me show you.
Yes.
And I thank God that this market is as complex as it is so that you can best understand what I'm saying. So
All right.
let me do this. Now we have a boss here, correct? Basically, we have a boss here. You see that now?
Yes, please.
So we have a boss here. So we have a sell candle, price took out structure. So we don't have a sell order flow, basically. So what's the rule for the sell order flow? We want to see a sell candle, basically a buy candle failing. Yeah.
Yes,
So
please.
you want to see a buy candle fail, like you want to see like bullish candle. What's happening? Sorry. So because we are bullish, yeah, we want to see bullish candle fail. So price attempt to buy and then failure of that bullish candle. Yeah.
Okay. Yes,
So that's what
please.
you want to see. Now look at this bullish candle. This buy didn't fail here. This buy didn't fail up until this point. Yeah. So this was the point the buy failed. You see that now?
Yes, please.
Now I want to check when did this break of structure happen. It happened on Tuesday. So Tuesday, this was Tuesday, London. This was London. Now I told you must come from previous day. So London, we had, right, this was Tuesday, still Tuesday evening. So till evening, we didn't have a sell order flow. Yeah, we didn't have a sell order flow. Now, this was Wednesday. So by Wednesday, we already have, price have already established a sell OF here by taking out this structure. In fact, it started take, look at where the structure broke from. Let me even show you. Not even that. This was its structure. This bullish candle failure. Look at it here. Attempted to buy. What happened? Failed. You see that?
Yeah.
Yeah. So this was where the buy candle failure happened. I don't even know if I'm, because it's been long. I hopped onto my chat. All right. Let's see. All right. Okay. Bearish candle, bullish candle. Yeah. So this was where it failed. This was the point where it failed. So what it did was it establishes this area as our high. Yeah. These are high.
Yeah.
So where is now your low? Where is your low? Just show me your low. If you can, annotate. Try your best and show me our low.
Although is yeah, where you just marked.
Just show me. After we have our sell order flow. So where is your low? Annotate if you can.
This side. This side. I don't know
I'm
if you
not,
can see.
I can't see. I can't see. Are you annotating at all? Use your annotation tool.
How do I find that place?
You can't find that. It's on your. Are you using a system or using a phone, a smartphone?
I'm using a phone.
All right. You can find your annotation button just at the. How do I even explain this? If you go back to your Zoom, you can find a place where you annotate. I think it is like a pen. You see that by your extreme left. Look left. Your left hand side of your
Okay.
phone is hidden somewhere.
Okay. Okay.
You seen it?
So this are high, yeah. So this will be the low. This side.
No, that's not the low. You see that's not the low. So we have your break of structure is here.
Yeah.
Yeah? The break of structure is
Yeah.
here. Okay.
Yeah.
I think I have to go back to the drawing we did. Let me draw that again. So we had this our break of structure, and then we have our order flow here. So if we establish this as our low and these are as our high, after a break of structure. So can you relate this to the charts?
Yeah.
This is our high now. So where's our low?
Okay. So this side.
Now this is it. Let me show you. Don't worry. Let me show you. This is
Okay.
it. We have this guy
Okay.
that took out structure. Yeah.
Okay.
Gave us our
Yeah.
sell order flow at this point here. So this is now our high. This is now our low.
Okay.
You see that now?
Yes, please.
So now, if you are going to be, if you want to mark out your range, this is where you will consider a break of structure when price takes it.
Okay.
This is where you consider a boss. You understand that?
Yes, please.
Yes. So not any of this. So you see how it took over 4 days within this range. So
Yeah.
if you are not patient enough to wait for price to come into what you call your premium zone, so let's assume this is your high, this is your low. Yeah.
Yeah.
So if you cannot wait for price to come into your discounted zone, you see how you would have been taking L's from here.
Yeah.
You are attempting to buy, you are failing.
Yeah.
Attempting to buy, you are failing. But the moment price came to the discounted zone, look at after taking out this liquidity, which is our flip zone, the reaction that took out this structure. You see that? This is our flip
Yeah.
zone. So the moment price took our flip zone here, you can find a